South African wine export sales took a hit in 2010 due to the increased strength in the rand. Wine exports to the United Kingdom, South Africa's largest trading partner, took the largest knock, contributing to a 5% drop in total export sales for 2010. But in spite of the gloomy export news, the industry received a PR and marketing boost from the 2010 FIFA World Cup, which saw South African wines entering into new markets for the very first time.
2010 was a really tough year for wine exports, and we saw overall a decrease of about 5%. But that was driven through specific trading conditions with the UK, and there has definitely been a positive World Cup in some of the highlights of the year, because we've had growth for the first time, very strong growth into a lot of new countries.
Traditionally, entry-level South African wines with a price point of about £3 to £4 per bottle have enjoyed healthy profit margins in the United Kingdom when the exchange rate is at about 13 rands to the pound. But at the rand's current trading levels, margins are shrinking and wine producers are feeling the pinch of the strong rand.
I think that at 7 to 7.50, that's where everybody's fine. You know, at 13.50 to the pound, the industry can manage and make a profit. But once we start to be, way below that, it starts really affecting our price competitiveness at the bottom mass volume level.
With the rand's strength showing no clear signs of abating, combined with a highly competitive global market, some South African wine producers and cooperatives are beginning to buckle under the pressure.
We are seeing that many farmers are finding it not profitable. We're seeing total shrinkage in the number of hectares under vine, so the industry is actually getting a little bit smaller. We're seeing that farmers don't have enough money to replace their vineyards, so they don't have the capital to. We should be replanting about 5% of our vineyards every year. That's not happening. So there are signs that the industry is still under pressure. And certainly at these kind of, rand values, it's only the sharpest and the fittest that are surviving.
While South Africa's low-end mass-produced wine market has taken an export knock, the high-end premium range wines have seen an increase in export sales, in some instances as high as 90%.
Our wine is more in the premium line bracket, retailing in the UK for around about £10 a bottle. And surprisingly enough, in the last year, our exports to the UK and internationally increased in the region of 90%.
For de Grendel Wine Estate, situated on the Durbanville wine route in Cape Town, the rand strength has brought with it its own currency challenges that have made it difficult to be globally price competitive.
We are quoting prices for export in either dollar, sterling or euro. But as the rand is strengthening against all three, it's very difficult to play around with prices in a very difficult market. Because you must realize the other factor is the doubtful economic situation in Europe and in America.
70% of de Grendel's total wine output is produced for the local market, with the remaining 30% for international consumption. The strong domestic market helps provide a good rand hedge for export, but as the rand strengthens against all three currencies, it makes pricing all the more difficult. To diversify its marketing strategy, South African wine producers are starting to look to the African continent as a new growth market, particularly in countries like Kenya, Nigeria and Angola. For de Grendel, the outlook for 2011 is cautiously optimistic, with the hope that the headwinds of 2010 will lessen and that the rand will reach a comfortable export level. Although South African wine export sales dropped by 5% in 2010, it was boutique wineries offering premium export wine that saw a surge in sales despite the strength of the rand. Now, for the other wineries, they had to deal with shrinking profit margins, and their strategy going forward will have to be looking at new business strategies and also aggressively tackling new markets in different countries.
you.